Hello viewers, welcome back to my channel. Humble Traders here again with another video in the series How Deep Do Pullbacks Go? Now this series was actually hatched out of a need to understand how pullbacks happen whenever a trend is in progress, and we understood that whatever profits you make, if you're not able to retain such profits, you end up losing the same profit you painstakingly uh, made from the markets. So we also did some research and found out that the big problem that traders face whenever they are in the financial, in the trading space is keeping their profits in their pockets. And what is the main killer? The main killer of these profits is pullbacks. Because even if you consider the premature entry, that is FOMO, and maybe analysis paralysis, when you tend to analyze too many things on your charts before you make an entry, in the end, the trade goes south, and while you intend going north or vice versa. And if you want to time that, they all boil down to pullbacks. So pullback is a major thing, whether intentionally or unintentionally. Intentionally, because I said intentionally because sometimes when you do a premature entry, it's not really a pullback. Maybe it's not really something that you may have done analysis paralysis and you ended up entering into the trade without actually waiting for every confirmation to line up first. So you can see that kind of situation can be termed as intentional error. So unintentional is the one that after you have done every analysis, but still the trade goes south due to the pullbacks that are actually happening in the markets. But in the end, pullback stands out as the major killer of our profits. That is why we are allocating a whole series using this unique strategy that we explain on this channel, trying to gauge the level of these pullbacks so that we can begin to try to retain our profits in our pockets, because we are all here to make money, not to lose it. If you are one of the people that are trying to leverage your trading or trying to level up your trading skills, or you're trying to leverage your trading skills on a very simple strategy, then you are at the right place. Because at Humble Traders, what we do is we analyze charts daily. We pick interest in a lot of setups that we see which line up with this particular strategy, which is the SIWA strategy that we explain on this channel. In this series, I promise to analyze pairs across the financial markets, which proceed under different trading conditions, and BTC USD is one of them. I have actually analyzed USD JPY. I have also analyzed gold, and now we are trying to analyze BTC USD, which is King Bitcoin. We all know what cryptocurrency is doing to the world right now. Even the world powers that did not want to accept the crypto uh, business are now open-handedly welcoming crypto into their investment portfolio. And that serves to be a positive news in the crypto market, which pushes price uh, with amazing speed. And because we can see this Bitcoin, there was a time it was falling actually on this, on this high here. I saw it from this high, and I watched as it fell to around here, and I also bought some. And then when it came and then posted this bullish candle, you can see here, this bullish candle. I did some calculations using another strategy, though not this particular strategy. I was able to predict that Bitcoin could be actually on its way back up, and that made me to quickly load up more Bitcoin. And then I have been privileged to partake in this whole move to the upside here, and even more, because as you can see, there is a fresh breakout to the upside. now we are seeing 76,269. So these are the kind of things that you use your solid trading system to try to uh, analyze pairs in the market, because trading is actually very risky. You just need to have a good trading plan, a good trading system, so that whenever you are on your charts, you will look for different things to line up, and then before you take a decision on what to do next. Like as I was saying, I actually took the trade from here, and I was analyzing to a very good friend of mine. I said that due to this and this that I saw, using that same strategy, which is not actually Siwa strategy, it was this gun trading cycles I was time cycles I was actually using there. I was using the gun fan also, so I placed the gun fan to from low to the a significant from a significant low to a significant high, and I took note of the gun angles that were actually supporting the price. I now said that I believe that Bitcoin is now finally on its way up. And then, like play, look at what has happened. So I respect that strategy also. I am not actually teaching it on this channel, at least for now, but we shall continue gradually and see what we can do. Maybe gradually we can keep improving upon what we bring into the uh, channel, and then maybe we can call it another thing so that people can have a focused learning curve. You can see, if you want to use the SIWA strategy on this Bitcoin actually, you just, since the indicators are already lined up here, you just need to look for a close because of this initial pull to the downside. Like I said, this pullback to the downside, which is one of the reasons for this video today. We don't want to waste much time. We better try to dive into the essence of the video today, so that we can begin to understand whether these things also happen in cryptocurrency markets. So you can see, as price was going up, it came down, went up and created another high. So now there is a significant fall here in price to the downside until it fell to around 15,596, when many were saying Bitcoin is now finally dumping and is going to like zero. So, but I didn't believe that. I only saw it as trying to rebalance according to another strategy that I know. It's just trying to rebalance and then gather more steam to rechallenge the high that it left. And alas, this is what is happening, as you can see from the charts right here. So, but if you're actually trying to gauge the level of pullbacks, uh, this pullback here, at least let's look at this pullback here, which has already happened and passed, but we need to understand um, what is actually happening. You see, because we are gauging, actually we are gauging a whole significant low to high. You just place your VIB level from the high to the low, from the low to the high, sorry, since we are looking at a bullish scenario. You're supposed to place your Fibonacci 2 after you pull it up on the charts, and place it from the significant low to a significant high. So supposing this was the high that was there, and we were not yet, everything happening to the right had not yet happened, and now we have placed our Fibonacci on this particular high. Let's use the second high that led to the bigger fall here. So you can see now, what can we see? We can see on the monthly, when price fell, it fell up to this level here. Let's place a red horizontal line at that particular point, so that we will know to what extent it fell, it actually fell to. So you can see from here, what we are seeing that it fell to even below 78.6. And I actually mentioned this earlier, that volatile pairs, like they do they actually do retrace deeply, more deeply than less volatile pairs. So it is not unexpected that Bitcoin has posted such a retracement. So, but after hitting this level, what can we see? Viewers, if you are just joining us, this is Humble Traders. Please leave a like for us, comment and subscribe to our channel. talk to us at the comment section so that we will know what kind of videos you would like to see us analyze. It is only by commenting that we now develop this bond between us, and then we can continue adding value to one another's lives, and then as we journey towards profitability together. Welcome back to our channel. So if you place this red horizontal line there, what can you see? You can see a deep retracement to even below the 78.5 Fibonacci. Why are you implementing all this? You're trying to do your best in trying to safeguard your money, and then instead of giving back your profits, you just want to what? You just want to hold on to your profit. But what will you be doing in all this when price was just falling like this? If you have another strategy, and then in future we are going to bring this a CY strategy that will help you also what? Trade this counter trend. But you know at the back of your mind that you are trading a counter trend, but that the main direction is up. So now it has hit this level. You will notice that price will begin to try to show some rejection. And what did we see here? We saw a massive move to the upside here in this very candle at the bottom here. So what do we do to it? What do we do to it? But if we look at it, based on the strategy that we are teaching here, you will see that we don't yet have an entry here. Why? Why is because we don't have a defined close above the what? The blue EMA at least, which is our 9 period EMA. Price has not yet closed. Price has actually pierced it. It has tried it once, fell back below, tried it a second time, fell back below. You can see even this teeny tiny candle is a whole 20 days of trading. So whenever you are looking at the monthly time frame, please just know what you are looking at and know how to now engage the market. So because of this failure in closing above the 9 period EMA, we don't have an entry here. We don't also have an entry here, but we have an entry here when it closed powerfully even above the what? The 21 period EMA. This has shown us the what? The preparedness to rally higher. Then what we need to do, there is a good thing that we need to do to ourselves at that point. We just need to hold on and what? We just need to hold on and wait for this retracement back to towards the EMA. What did it do? It just came and pierced the 40 EMA and showed sign of going back. And what do we do? As it is here, since we actually got an entry at this point, what we need to do, we can begin to use our Fibonacci retracement to see this candle and this candle. How much retracement did this come back to the body of this candle? And then we take the retracement of this whole fall to the body of this candle. And that's how you try to form your decision as you study your charts. Now let's take for the first candle. Look at it. We have placed our Fibonacci tool on it, and then what can we see? Let us see. Let us try to see what we can see. So, and you can see price actually came back and then pierced up to below the 50 EMA, and then started going back powerfully. And then what happened? It went and closed above the 21 period EMA, giving us an entry trigger, an entry signal actually, not an entry trigger. An entry trigger will happen by the time we get a definitive pullback towards the EMAs. So what do we have? Now this is our next candle of interest, because that is the candle that gave us the signal. So what do? We just come and place our Fibonacci tool at the level, at the high and low of that same candle. Look at it. Sorry. Okay, we have placed it at the low. Let's make sure we also have it at the top here of that same candle. Don't forget, this is our candle of reference here. So we want to quantify the level of pullback of this whole retracement that happened over a period of some months here. 1, 2, 3, 4, 5, 6. Over a period of 6 months, price continue trying to rally to fall towards the uh, fall back into the body of this candle in form of retracement, and that's our entry trigger we are waiting for to form. What do we have here? Let's try to zoom and see to what extent we had that retracement. And as you can see here, I think I saw the 50% level. Can you see? Can you all see it? Look at it. Look at it. Price broke the 50%. Here it touched it. Here it broke it. It broke it slightly. Broke it slightly here. Look at it. It has been actually been breaking it and rejecting it here. So now what is happening here? Now we have a signal. The moment we see this and this rejection to the upside, and then this price now also breaking and rejecting back to the upside, we already have a signal here. That is the entry trigger we are waiting for. Let's just place a horizontal line at that level and then quickly drop to the lower time frame to see what we will have there. So you can see this is how to quantify your pullbacks. There is no need to worry, and then don't worry even if as you are seeing this on the higher time frame, we build our bias from the higher time frame so that when we go to the lower time frame we can easily continue to participate even as we know the original direction of the trend. So look at that pullback. Look at what it did. That is that 50% fib level. On dropping to the weekly, look what it did. Look at it. It respected that level here. Look at it. It came back, hit it, rose up again, came back and hit it. So I consider like this one to be the second W lettered leg, which shows the intent to now rally higher. So from weekly, supposing we were looking at a weekly and we saw this M form like this, the M formed like this. It first of all broke the, look at it, it first of all broke all the EMAs. Look at it, it even broke all the EMAs after this retracement. It broke all the EMAs and then starts to retrace back towards this same EMA that went up powerfully because there are gaps to close. I always say whenever price moves sharply in one direction, it always retraces back towards that very candle that went higher or lower so it can mitigate some gaps. So that's what exactly the price has done here. And as you can see, it came back into the body of this very large candle and then tried to rally back and then retested that region, and you can see it's like a W shape, but this leg is now going to break out to the upside. So if we were watching this on the weekly, for example, and you saw all these consolidations, you will not mind them. You won't mind even this bullish candle, you won't mind even this one. In fact, even this very one here, if I were you, I won't bother about it because there is actually a close above the blue EMA, but it is not really very clear. So I will wait for a definitive close above the EMAs, and which we have here. Then I know that one part is done. What I will do next is to quantify the pullback back into the body of that candle that broke to the upside. So again, let's pull up our fib tool and try to quantify that move. Look at the candle of reference there. Since it's the one that actually broke to the upside, so we have our 100 level there. I think that's our 100 level. If it's not clear, let us move to the daily so that we can see what actually happened at that particular point. Remember, we went back just before that rally, that very massive rally to the upside. We are just studying what happened using the strategy that we are using on this channel. So as you can see from here, this is it. That is the top, that's the zero level there. But we didn't quite get the 100% level because that place was too tight, and the zooming of that candle was actually a tiny candle, so we needed to actually drop down to a lower time frame where we can easily see what is happening. But before then, let's quickly drop a horizontal line at that level, so that we'll find it easy to reference that point even when we leave this time frame. We said this was the candle. Okay, this was actually the candle that we're making reference to here. Look at it here. It broke to the upside, then there is a kind of retracement back in, and then what do we have? I said we can take the Fibonacci assessment of this very candle that broke to the upside, and as you can see, we missed the candle, so we just want to bring our measurement back to the candle here so that we can know exactly what happened. Look at it. I think we have it now. Yes, we can shift this fib level to the right so that we can easily view what we want to see. So now check and see what happened. You can now see that that pullback actually came to the 38.2 fib level. That next pullback that happened with all these red candles, it came to the 38.2. You see, like this one, it broke the 38.2 level and rejected back upwards. Then we had another retest of that level, and then this time it didn't go as deep as the other uh, uh, the previous 3 months back candle. Then it also showed another kind of rejection. So by the time we see this and we note this level 25416, and we know that it is a very strong region, which happened when we got our entry signal on the monthly. Where did we get our entry signal? When we had a defined close above the EMAs. I think all the EMAs, in fact, the move was so fast that it even closed above almost all the EMAs that we have, and that called for this very deep pullback, like I always told you in previous video, that when you have a pullback, when you have a price breaking through significant levels such as where the EMAs are covering or are representing or supporting, or price in form of resistance or support, whenever price breaks through them, it retraces and depends on the specific number or the specific type of EMA it breaks through, it retraces back proportionally to the period of the EMA. I mean, if it breaks a 9 period EMA, the retracement will be less. Not it will not be as deep as if it had broken a 21 period EMA. The retracement there will be deeper than in the case of the 9 EMA. So now what we are seeing is we have a 38.2 retracement. So this is enough for us, and we have that line to support what we are seeing. So we can see now gradually in the other candle we saw a 50, I think it was it a 50% retracement level we saw on this massive candle, but we didn't get an entry. We got an entry here, so that's why we took it again so that we'll see the level of retracement on that candle, and we saw a 38.2 fib retracement level, and it's also a very strong level. So we'll continue to stock our entry by moving down to the weekly chart, while we keep an eye on that uh, red line, on that red on that red line that we placed there. I think the line has shifted a bit, but we are getting, what are we getting? We're actually getting 25455 now. That is where we should keep an eye on. So let's go to the weekly. You can see that's exactly where it bottomed, right up bottomed again, and then now it's showing it's actually showing sign of going back up. So the moment you see this close, look at it, it's so tiny, the candles are so tiny, but you just need to zoom them out so that you can view properly what is happening. Look at it, we had the first close here above the EMA. So even as we have this one, if we join here, we place our stop loss somewhere down here, or use an ATR for a standard stop loss placement, so that by the time we start moving up, we expect what? A retracement back, and we have it here at this red candle. So you can see after that, what did price do? After that retracement, it actually, what price actually did here was, it actually even retraced past the 100% of the previous week's candle, meaning that there could be gaps here that it wanted to come and fill. That was why it even passed the whole body of the previous week's candle. So but immediately it did that, it cleared the liquidity below, it rejected upwards, and since then price has been powerfully moving to the upside. So you can see with SIWA strategy, your entry would have been on this candle here, your stop loss will be somewhere here. Tell me, did you see the price revisit the area of entry? It left you in there, and then look at it, price continued to move powerfully to the upside like that, and then all the retracement that happened, it happened with you in it, and price never came back to you. So let's try and see how many pips movement that would be. I think when you divide that by 100, you may be having about 50,000 or so pips. By 100, you'll be having about 50,000 pips move from that low to this high. So you can see why it's always good to try and understand your multi-time frame analysis. And then we stopped at the weekly, actually stopped at the weekly here. We should have been dropping to the daily. Let's drop to the daily and still be noting that particular position where we had that 25455. Look what it is doing. We are just trying to stock entries. When you are stocking entries, you must have seen a close above um any of the EMAs on a higher time frame, and price has already started retracing back into the body of that weekly or monthly candle. Then you drop to the lower time frame where you continue to stock and see what price is doing. If the retracement you saw on the weekly, for instance, and you drop to the daily and you now saw this retracement, then you keep an eye on it and also use your fib level, or you use from a significant low to a significant high, so that you see the level of retracement it's having here. And the moment you have that, I think this came to almost like 90% of this whole structure. The price dropped to almost 90% or so of this structure, and is now showing evidence, I mean like signs of recovery. How do you know? Because after being supported, we are now seeing price is creating something like, it's actually creating uh candles closing above our EMAs. You can see how tightly it matched the EMAs here, and then it closed above them, and then went strongly up, and even since then this 9 EMA has been holding price. So if you have been waiting to see a deeper retracement into the red or the green EMA, you never had it here, because price just continue clinging to the body of the 9 period EMA, showing you how powerful the uptrend is. So you can see also by implication how powerful this trading system is, and all you need to do is just to practice and understand how to use this trading system, engaging your pullbacks. So from now on, I think this should be the last video that I'm doing on pullbacks. I've explained all you need to know concerning that, how you can try to retain your profit in your pockets by trying to gauge this pullback using the Fibonacci tool, and also using your multi-time frame analysis, so you don't end up catching a downtrend instead of an uptrend or vice versa. That is what multi-time frame analysis will help you to achieve. And then the Fibonacci tool will also help gauge the level of that retracement, whether it is at the discount level or at the what do you call the other level, whether it is at the low region. Forgive me, I've forgotten the term that the forex mentor used to use here. He would say premium. Okay, it's discount and premium, whether it is at the discount, which is the very low region where you can buy, or at the premium level where it is at the selling region. So if you stick to this plan and you work strictly within the premises of your trading system, which the SIWA strategy has provided us with, we keep saying that we are grateful to God. We are indeed grateful to God, because if you apply this trading system properly, you tend to make huge amount of pips in a single trade, as you can see even from this uh, analysis that we have done on this Bitcoin itself. And it works for all these pairs, as you can see. It will actually works for all these pairs. All you need to do is constant practice, so you can crack it and then understand how to apply it in any trading condition of your choice. If you are just joining us, please like our video, subscribe to our channel, and then participate in the comment section. We all honestly want to see you commenting at the comment section, because we want to know, we want to engage with you, we want to know what you want to see us bring your way. And it is only through comments that we'll be able to know what actually you are looking at, or what you are thinking, or your thoughts about our analysis, or even your thoughts about the trading system we are using right now. They are all useful comments that we can actually look in case there are areas of improvement. Your comments may also actually shed more light, because by your questions we may see maybe what we are leaving out and we're not explaining to our viewers. But summarily, this trading system is one of the most powerful I have come across in my years of experience in this forex market. And come market open, all our positions are open, and we shall keep trading in the direction of the trend, especially using this multi-time frame analysis, which we already know that is part of the problems that make us give profits back into the market after making them. So thank you very much for staying with us. Thank you very much for uh, the support that we have received from you within such a short period of time, and we shall keep trying or striving to bring value your way, valuable contents. All we need is your continued support. So until we meet in the next video, be safe.